This is going to be a homework walkthrough for Chapter 1-2 assignment. I'm going to walk through each problem individually. So we will start with question 1. I know you guys are working in the ebook. I have taken the same problems and put them into an Excel spreadsheet because I like to be able to click on the numbers and have Excel do the calculations for me. And just remember that I will have different numbers than you, but I should have roughly the same problem as you. So you can do your own calculations with your own numbers. So question 1, Kuban Company's relevant range of production is 21,000 to 25,000 units. When it produces and sells 23,000 units, its average cost per unit are as follows. What that means is 23,000 units is what the number that they use to calculate these per unit costs. Okay, and then our required are as follows below. So first, I'm going to put my relevant range is 21,000 to 25,000, and the average units 23,000. And that way, if I need to reference those numbers, I can. And so I just took this information here that they gave me and I copied it into Excel so that I can reference those numbers to be able to complete the required things. And just as a side note, so remember with variable costs, the per unit stays the same no matter how many units you produce and sell. But the total variable cost is different if you produce or sell different amounts of units. And how you get that total, it's the variable per unit times the number of units. Fixed costs react differently. For fixed costs, the per unit is different. But for fixed costs, the total fixed cost remains the same no matter how many units you produce and sell. I like to think of fixed costs like it's my rent. It's the same from month to month. And so the way you figure out the per unit fixed cost is the total fixed cost divided by the number of units. So that's going to become important later in this problem. So required 1, if 21,000 units are produced and sold, what is the variable cost per unit produced and sold? Okay, so we have to figure out which ones of these costs get added up to reflect the variable cost per unit produced and sold. So that is going to be my direct materials plus my direct labor plus my variable manufacturing overhead plus I believe let's see. Hold on for just a second. Let me make sure I'm not leading you astray. There's one more we need. So it's okay. So these are things that end up in the cost of goods sold. So we also need to add the variable selling cost plus the variable administrative. And so that is going to be my variable cost per unit produced and sold. And remember, this per unit cost, because it is a variable cost, the per unit is going to be the same no matter if I make 21,000 or 25,000. So for required 2, it's going to be exactly the same. So it's going to equal the direct materials plus the direct labor plus the variable manufacturing overhead plus the sales commission plus the variable administrative expense. So for my problem, 1950 is the variable cost per unit produced and sold. Now, total amount of variable costs related to the units produced and sold. So 3 and 4 are the 21,000 units and the 25,000 units. And they want the total variable, which if you'll recall, total variable is going to be different depending on how many units we produce and sell. And so to get that total, again, we take the variable per unit times the number of units. And then since I'm in Excel, I can drag that over and it's going to be the variable per unit times the 25,000 units produced and sold for required for. So see, my totals are different, but my per unit are the same for variable cost. Okay. On this one, the average fixed manufacturing cost per unit produced and sold. I can't figure out the per unit until I know the total amount of fixed manufacturing overhead. And so this is just going to be dealing with this fixed manufacturing overhead right here. So for my problem, it's 610. So first I'm going to figure out 7 and 8. I'm going to figure out the total. And so that equals that $6.10 fixed manufacturing overhead times the number of units. So for mine, it's 21,000. No, that's not right. Ah, I see what I did wrong. This is a common mistake, and I fell right into their trap. Okay, so if you'll recall, the fixed remains the same. So in order to find out the total fixed manufacturing overhead, I have to multiply the $6.10 by the number of units that were used to create the chart. So for mine, it's this average unit of 23,000. And that's how I find out the total amount of fixed manufacturing overhead. So again, that will be the 610, but it is multiplied by the average units that were used to make this chart. And if you'll recall, the total fixed cost is the same no matter how many units I produce and sell. And so that fixed cost is going to be fixed, going to be 610 times that 23,000 units, the average number of units. So total amount is the same. Now that I have the total amount, I can figure out the average fixed manufacturing cost per unit. So that will be equal to the total fixed manufacturing cost divided by the number of units. And then again, because I'm in Excel, I can drag that formula and it's that total amount of fixed manufacturing divided by the number of units to get the fixed per unit. Okay, and that's all you have to enter in for question 1. Okay. Excuse me. All right, question 2. We have now where Harris Company manufactures and sells a single product. A partially completed schedule of the company's total cost and cost per unit over the relevant range of 52,000 and 92,000 units is given below. So for required one, they want me to complete the schedule of the company's total cost and cost per unit as given in the relevant tab below. Okay, so the way we're going to figure this out is, so again, remember, I have different numbers than you, and I copied this straight out of the book. So for my first column, I have 52,000 units, 166,400 variable cost. My fixed cost is 420,000 for a total cost of 586,400. So the first thing I want to do is I want to figure out what is my variable cost per unit. And so that is going to equal my variable cost total divided by the number of units in my first column. So for mine, I have $3.20 per unit. And now fixed per unit is going to equal the fixed cost divided by the number of units. Okay. And then it added those up for me. So the first thing I can do is, because I know variable cost per unit remains, remember, per unit remains the same no matter how many units I produce and sell. And so this is going to equal the same thing across. Okay, so $3.20 is my variable cost per unit, no matter how many units I sell. And then the other one that I know is my total fixed cost remains the same, no matter how many units I produce and sell. So fixed cost is the same across the total fixed cost. Okay, now that I know that, to figure out the total variable cost, I will simply take the number of units times the variable per unit. And because I'm in Excel, I can drag that formula and again show you that it's that variable per unit times the number of units for that column. Now you see why I love putting this in Excel. It makes it so much easier. Now I need to figure out the fixed per unit. So again, that is going to be that total fixed cost divided by the number of units in this column. And again, I'm in Excel, so I drag that formula across and show you again that it's that total fixed cost divided by the number of units. And that gives me my answers for required 1. Now, required 2, assume that the company produces and sells 82,000 units. I'm going to put that right here. During the year at a selling price of $10.03 per unit. Prepare a contribution format income statement for the year. Okay, so if you'll recall, in the book, you're going to have to put in these labels, and a contribution margin format income statement always has sales minus variable expenses equals contribution margin minus fixed expenses equals net operating income. Okay, so sales, how do we calculate sales? Sales is calculated by the number of units they told us they're going to sell times or multiplied by the selling price that they told us. And if you'll recall, I got it right there in required 2. That's where I got those 2 numbers from. Okay, so there's my total sales. Now my variable expenses Because we're still dealing with the same company, my variable expenses are going to be the number of units sold times that variable per unit cost for the company. So there's my total variable. And then if you remember, contribution margin is calculated by sales minus variable expenses. And then my fixed expenses, remember my total fixed expenses is the same. No matter how many units I produce and sell, it's the same. It's like rent. It's the same from month to month. And then net operating income is calculated by taking contribution margin minus the fixed expense. And so just remember, as you're entering required to into the book, make sure you fill in these labels and then fill in these numbers. And as always, as we're going through these problems, be really, really careful not to put any typos anywhere, or that will skew your numbers and you'll get the wrong answer. Okay. Question 3. The following cost data pertain to the operations of Montgomery Department Stores Incorporated for the month of July. So they gave us all of this information. And again, I just typed this straight out of the book into my Excel document so I can reference these cells. And so what we have is we have Montgomery Department Store, and then within that department store, we have, let's see, oh wait, we have the Avondale store. Okay, so Montgomery Department Store is the whole corporation, and they have lots of different stores. And they have the Avondale store as one of the many stores owned and operated by the company. Okay, so that's like the whole building, that's the store. And then within the store, we have the apparel department is one of its many departments at the Avondale store. The central warehouse serves all the company stores. Okay, those are all important things because in each of these required, we have to make sure we're thinking about what is my cost object. So required 1, what is the total amount of the cost listed above that are direct costs to the apparel department? So this is, remember, the Avondale store is like the whole building, and the apparel department is just a part of that whole store. So that is our cost object, is the apparel department. So now we need to figure out what can be traced directly back to the apparel department. Okay. Corporate legal office salaries, no, that's corporate. That doesn't have any, we cannot tie that directly back to the apparel department. Here we go. Apparel department costs of sales at Avondale store is indirect to the apparel store. Store manager's salary at the Avondale store. Now that one's a little tricky because that's direct for the store, but that is indirect for the apparel department. So I don't want that one for the required one. Apparel department sales commission for the Avondale store. Okay, that can be directly tied back to the apparel department. Store utilities for the Avondale store. Well, that's direct for the whole store, but that is indirect for the apparel department. You can't divide out what utilities were used by one little corner of the store. Okay, apparel department manager's salary at the Avondale store. So right there, that is tied directly to the apparel department. So I want that one. Central warehouse lease cost, that is indirect. Janitorial cost for the Avondale store. Again, this one is going to be direct if we were talking about the whole store, but we're talking about the apparel department. So it is an indirect cost for that. So we do not want that one. Okay, so my 3 Direct costs for the apparel department are the apparel department cost of sales plus the apparel department sales commission plus the apparel department manager's salary. So my total direct cost for the apparel department is $124,450. Okay. Now, total direct cost for the Evandale store. So now we're talking about the whole building, the whole store. So corporate legal office salaries, nope, that's indirect. The apparel department cost of the Evandale store, so that is direct for the whole store. Corporate headquarters building lease, nope, that's indirect. Store manager's salary for the Evandale store. So remember, our cost object now is the Evandale store. So we will include that one this time. The apparel department sales commission for the Evandale store, we include that. Store utilities for the Evandale store. So again, because our cost object is the whole store, we will include that one in this answer. Central warehouse lease cost, no, that's indirect. Janitorial cost for the Evandale store. Now that we're talking about the whole store, we will include the janitorial cost as a direct cost. So we're going to take the apparel department cost of sales plus the store manager's salary plus the apparel department sales commission plus the store utilities plus the apparel department manager's salary plus the janitorial cost, which gives us $167,650. Okay, now back to just the apparel department. So that was this one, and this one. They want to know which of those direct costs are also variable costs. So the apparel department cost of sales, that's variable. Let's see, the apparel department sales commission, yes, that changes depending on how much you sell. And then the apparel department manager salary was the other direct cost for the apparel department. But remember, if you get paid a salary, that doesn't change no matter how many hours you work. You just get paid a lump sum. So that is a fixed cost. So just these two are variable and a direct cost for the apparel department. So the apparel department cost of sales plus the apparel department sales commission. Okay, that was question 3. Now question 4, we're just going to talk through this. I decided not to erase all these because that would take forever for me to type them back in. So Madison Seniors Care Center is a nonprofit organization that provides a variety of health services to the elderly. The center is organized into a number of departments, one of which is Meals on Wheels program that delivers hot meals to seniors in their homes on a daily basis. Required. A number of costs of the center, typo, and the Meals on Wheels program are listed below. For each cost listed below, indicate whether it is a direct or indirect cost of the Meals on Wheels program, whether it is direct or indirect cost of a particular senior served by the program, and whether it is a variable or a fixed cost with respect to the number of seniors served. Okay, so A, the cost of leasing the Meals on Wheels van. So in the first column, it's the whole program is our cost object. The second column is for an individual senior served by the program. And the third column is it variable or fixed in relation to how many seniors are served. So the cost of the lease of the Meals on Wheels van, that is going to be a direct cost for the whole program, but you can't tie any piece of that lease directly back to any one senior who's served by the program. So it is indirect for the seniors individually. And a lease is a fixed cost that doesn't change whether we serve 10 seniors or 100 seniors. That lease is going to stay the same month to month. So that is fixed. B, the cost of incidental supplies such as salt, pepper, napkins, and so on. So the incidental supplies for the program, that is going to be direct to the whole program. And now, whether it's direct or indirect for an individual senior would depend on how they keep track of things. So that is why this one can be a direct cost if they keep track of it, or if they feel like it's not worth the time to keep track of napkins, salt, and pepper, it could be an indirect cost. And that cost will change depending on how many seniors are served who use salt, pepper, napkins, etc. And so that is a variable cost because it changes by how many people are served. Okay, C, the cost of gasoline consumed by the Meals on Wheels van. Well, obviously for the whole program, that's a direct cost that can be tied directly back to the van that serves the program. For the individual seniors, that is an indirect cost because you can't assign 1 gallon of gas to any one particular senior who was served by the van. And it is variable because the further you drive to deliver more meals, the more gas you're going to consume versus less meals served, then your gas cost goes down. So that is variable. D, the rent on the facility that houses Madison Seniors Care Center, including the Meals on Wheels program. So this is a whole building where the Meals on Wheels program is just a part of it. So that is why this cost is indirect for the whole program, obviously indirect for each senior, because if it's not direct to the program, it can't be direct to an individual using the program. And then it is fixed because it is rent. If you think about rent from month to month, it stays the same no matter how many meals they produce and sell out of that building. Rent doesn't change. It is fixed. E, the salary, ooh, there's an important word, of the part-time manager of the Meals on Wheels. So that is direct to the whole program, indirect to each individual person served by the program, and fixed because it is a salary. Depreciation on the kitchen equipment used in the Meals on Wheels program. So obviously that is direct to the program. You can't trace depreciation back to any one senior served by the program, so it is indirect. And depreciation is always fixed. It doesn't change from month to month. Okay, the hourly wages. Ooh, that's important. Hourly wages of the caregiver who drives the van to deliver the meals. So that is direct to the program. Now, again, depending on how they keep track of things, this could be a direct cost if they keep track of how many minutes he takes to serve one particular senior, how far he drives, or if they decide it's not worth keeping track of those kind of things, it could be considered an indirect cost. It just depends on how they keep the records. Now, again, these are hourly wages for this caregiver. And so that is a variable cost because the more meals he delivers, the more hours he will work, the more his paycheck will be. The less meals he delivers, the less hours he works, the less his paycheck will be. So it is variable. The cost of complying with health safety regulations in the kitchen. Okay, so that's direct to the program. That cannot be traced back to any individual senior, so that is indirect. and this is a fixed cost. The cost of mailing letters soliciting donations to the Meals on Wheels program. That is direct to the program, indirect to each individual, and for whatever reason, they decided that this is fixed. So they must have a fixed number of envelopes that they mail out each month. And that is question 4.